What if I told you the party might be over? After 2 years of 20% plus gains, the market's golden chariot, led by the so-called Magnificent 7 feet, is finally showing cracks. And if you're still riding these stocks like it's 2023, you might be in for a brutal wake-up call. I'm talking about Nvidia, Apple, Microsoft, Meta, Alphabet, Amazon, and Tesla, 7 companies that make up 30% of the entire S&P 500, and were responsible for more than half the index's gains in 2023 and 2024. But this year? They're dragging the index down. Hey everyone, Ernie here. I'm ACA and MBA, but not a financial advisor. So please do your own research before making investment decisions. If you find value in content like this, hit that like button, subscribe to the channel, and let's get into the truth behind each of the Magnificent 7, because valuations have shifted big time, and the opportunity, or the trap, you're stepping into today might not look like it did last year. Let's start with the 900-pound AI gorilla, Nvidia. This is the semiconductor king powering the AI race, but also maybe over-relying on it. Stock number 1. Nvidia market cap. $2.7 trillion 12-month gain. Plus 26% 2025 YTD. 20% 70% of their revenue comes from hyperscalers, Amazon, Microsoft, Meta, Alphabet. 3 of those 4 are now making their own chips. That's not a yellow flag, that's a red one. Forward PE. 24.6x. Well below 5 years AVG of 40x, PEG ratio. 0.8. Cheap for growth. EV, EBITDA. 31.1x versus 5 years AVG 58.1x valuation is compelling. If you don't own Nvidia, now might be a smart time to nibble. Me? I'm holding, not adding, but if you've been sitting on the sidelines, this might be your shot. Stock 2. Apple, AAPL, Apple. The heavyweight champ. But I'm just gonna say it, this is a company running in place. Market cap. $3.2 trillion 12-month gain. Plus 25% 2025 YTD. 15% zero revenue growth. Lower net income than in 2022. Yet stocks up 25%? Why? Buybacks. $100 billion of them. That's not growth, that's financial engineering. Forward PE. 29.1x. Above 5 years AVG. EPS growth estimate. 9%. I sold Apple in January. The story doesn't justify the valuation. That's just discipline. Rating. Hold. Borderline sell. Stock 3. Microsoft. MSFT. Microsoft might be boring compared to Nvidia, but boring is beautiful when it's diversified and efficient. Market cap. $3 trillion support level. $350 cloud, gaming, office, AI, cybersecurity. Microsoft's got fingers in every pie. EBITDA margins up from 45% in 2020 to 55% now. That's elite. Forward PE. 26.4x. Below 5 years AVG, EV, EBITDA. 20.8x growth forecast. 15%. This is what I teach. High-quality companies at good prices. Microsoft checks all boxes. Rating. Strong buy. Stock 4. Alphabet, Google, Alphabet. My largest individual stock holding. And right now? It's a value play hiding in plain sight. Market cap. $1.9 trillion 2025 YTD. 16% search. YouTube. AI. Cloud. DOJ might force a Chrome spin-off, but that could actually unlock value. Forward PE. 16.7x. vs 5 years AVG 22.4x. EV. EBITDA. 12.9x growth. 13% annual EPS trading at half the multiple of Microsoft or Apple, with better growth. It's not just cheap, it's mispriced. Rating. Strong buy. Stock 5. Amazon, AMZN. If Alphabet's my biggest, Amazon's my favorite. E-commerce, AWS, Prime, AI, and now, their own chips. Market cap, $2 trillion 2025 YTD. 16%. They're spending nearly $100 billion in capex, and still cash flow positive. Forward PE, 30.1x EV, EBITDA, 16.9x, lowest in history, growth forecast, 19%. This is conviction. This is what undervalued growth looks like. Rating, strong buy stock 6. Meta, AI leader, ad king, cost machine. High returns, high spend. And the risk? The economy. Market cap, $1.4 trillion 2025 YTD. 6%. Ad dollars are the first thing to go in a slowdown. But Meta's more efficient than ever. Forward PE, 22.4x growth, 12% EV, EBITDA, 16.2x valuation slightly stretched, but justified. I sold at $655, bought back in mid-500s. This is still a nibble zone. Rating, moderate buy stock 7. Tesla, TSLA. Tesla is a magnet, for hype, politics, and volatility. Up 55% in 12 months, down 30% YTD. It's a wild ride. Market cap, $940 billion. Forward PE, 152x EV, EBITDA, 74.3x. Forget fanboys. At 150 plus PE, this is priced for perfection, while Elon's running 5 companies and playing political chess. I don't hate the stock. I just don't want to own it outright. Options? That's a different story. Rating, sell, prefer options only. So there you have it, the Magnificent 7. 2 years ago, they were printing money. Today? It's a very different market. And not all of them deserve your money. This year is about strategy. About discipline. About cutting through the noise and buying real value. That's what we're doing here. Let me know your ratings in the comments. Which stocks are you holding? Which are you dumping? And as always, smash that like button, subscribe for more, and I'll see you in the next one.